Well, welcome to lesson number 7. After this class, we'll have one more session and the term will end. So congratulations on having made it thus far. And of course, you want to finish it up. In lesson 7, we take up chapter 11, which presents a discussion of proprietorships, partnerships, and corporations, the three basic forms of business organization. We begin with a description of each of these. Our main focus will be on the corporation. The key to the formation of a corporation are the articles of incorporation and the corporate charter. These are documents that are issued by the state in which the corporation is formed, and they govern its operation and management. These are public documents, by the way, and they're issued to establish legal existence of the corporation and to inform those who might be doing business with them as to that fact. Only a few laws regulate the operations of proprietorships and partnerships. Those are relatively regulation-free. Corporations, on the other hand, are heavily regulated. Ownership of a corporation is evidenced by stock certificates called shares. A closely held corporation is one for which the stock trading is done between individuals only. That is, there's no market broker that just the individual who owns stock may elect to sell it to another. A publicly held corporation has its shares for sale to the general public. This is through stockbrokers who are members of an exchange, like the New York Exchange or the American Stock Exchange or the over-the-counter exchange. Over-the-counter, in this case, means by telephone or by email. Extensive regulation of stocks began after the stock market crash of 1929 and during the following Great Depression. Most recently, following the dot-com crash at the turn of this century, which brought about further regulation in the form of the Sarbanes-Oxley Act of 2001. We've discussed that in class already. One drawback to corporate business is the double taxation of income. Corporate income is taxed when it's earned, and then when dividends from this income are paid to individual stockholders, those are taxed again when they're paid out. The Chapter S corporation was invented to ease this situation for the owner by taxing at the individual rate and taxing once only. So an S corporation is typically one individual, not a large number as in the case of a more common C corporation. The key advantages to corporate business are limited liability, continuity beyond the life of the owner, ease of transfer of ownership, and advanced management structure and the ability to raise large sums of capital. We now introduce accounting for capital stock. Concepts include terms like par value, stated value, and other valuation terminology. Stocks are categorized as authorized, issued, outstanding, and treasury. These would all be common stock, just where are they being kept or under what heading. Classes of stock include common and also preferred. Included are procedures for recording dividends, stock splits, and appropriations of retained earnings. By no means does this exhaust the accounting procedures necessary here. This is one of the more elaborate parts of the law and accounting practice, but we'll try to keep it simple for our purposes. We next discuss the price-earnings ratio, along with price increases and decreases. The chapter closes with control of the business through a majority of stock ownership, how that's done. We will look at the 10K financial statements because they're mentioned as well, and we will examine the financial statements of some selected firms in class and discuss the various sections of the 10K report and how it aids investors wishing to purchase stock that will prove to be a sound investment. By the way, the 10K is just the number or of the form issued by the IRS. It's like a 1040. Personal income, but it's corporate and a lot more elaborate, very, very interesting. We'll take a closer look. For our last week, we will examine the statement of cash flows and the importance of this in running a business. If time permits, we may discuss investing in stocks as a wealth building activity. If you have any interest in that, do let me know. And be sure to review your grade status by completing any unfinished assignments and or quizzes. I want to be able to assign you not just a passing grade, but an excellent grade, if at all possible. So that will conclude our session on equities and corporations in particular. We'll also spend a little time talking about the entrepreneurial side of accounting and business, just for general purposes and possibly because of interest of members of the class. Do take a look and bring with you lesson 7. Lesson 7 looks to me like just one set of problems, and so we will perform those for chapter 11. It's up to problem 18. The comprehensive problem on page 616 and 617 is dropped for our purposes, not necessary for you to complete that problem. All right, so make sure you take a look at those learning objectives, and we'll cover them in class as we go. And of course, don't forget the online quiz. Well, that's it for this week. Look forward to seeing you in class Friday night, and a very happy Easter week to everyone.